sure you heard that you can write off medical and dental expenses on your taxes. Let's take a look if you actually can do that. According to Publication 17 issued by IRS, your medical expenses may save you money at tax time, but a few key rules apply. Rule number 1. You can include expenses you incurred only for yourself, your spouse, and your dependents, and nobody else. Let's take a look at what kind of expenses you can actually include. Those are expenses for diagnostic procedures, for prescription medications, for procedures to prevent any medical condition, your cost of any devices that ease your condition, cost of treatment, cost of ambulance ride to a hospital, and cost of any transportation like your car to go to doctor's visits, including parking and tolls costs. You can deduct all of this, you can include all of this only if you itemize deductions. That is again according to Publication 17 by IRS. You can include only those expenses that you incurred during this particular tax year. And if you itemize deductions, if you take standard deduction, you can't claim these expenses. Let's take a look at the second page of Form 1040. Line 40 clearly says that you can either itemize deductions or you can take a standard deduction. You cannot do both. What is a standard deduction? A standard deduction is the first set amount that is subtracted from your income to come up with taxable amount. This is your first tax break, and for married filing jointly it is $12,400 for year 2014. For single people it's $6,200. Let's take a closer look at part of the form where you claim medical and dental expenses. The first thing you do is record the total amount of your medical and dental expenses on line 1. Then on line 2 you write the amount of your total income that you can find on line 38. Then there is a threshold. You can only deduct the amount of medical and dental expenses that is more than 10% of your total income, which means you need to do the calculation. After you found the calculation, you need to subtract line 3, which is the 10%, from line 1, and whatever is left goes on line 4. Let's take a look how that number on line 38 appears. It is transferred from line 37. That is the last line on Form 1040, the first page. Let me take you closer. How that number is calculated, the number on line 37. First, you have to add up all your income. That can come from wages, from interest you received, from any IRA distributions, from rental income if you have any, from unemployment compensation, and anything you can find in this section. Anything applies to you. It all summed up on line 22. Then whatever expenses you can deduct are recorded in the next section. This can be educator expenses, moving expenses, alimony paid, student loan interest deduction, tuition and fees, and so on. Anything you can find in this section that applies to you. All of that is summed up on line 36. Then you subtract line 36 from line 22 and you come up with the number on line 37. Let's take a look at Tom and Jane's W-2s. This is a case study. I will give you some real math to come up with that number. So the total income from these two W-2s is $51,031. 10% of that is $5,103. Their total expenses on medical services and dental services for the year were $7,528. And the difference between the 10% of their total income and the medical expenses is $2,425. Of course, they don't own a house, they don't donate a lot of money to charity, and their medical expenses alone will not exceed the second tax break, which is for them, as married filing jointly, $12,400 in year 2014. Remember, line 40 says just that. You can do either one. You cannot do both. So, itemized deductions make sense only if you own a house, and that leads to you paying real estate taxes that you can deduct on your itemized deductions form. Also, mortgage interest comes with owning a house. You can deduct that as well. If you own a car, you can deduct personal property taxes. And if you donate money to charity, if it's a significant amount, it will make a difference. You can record it here, whatever the amount is. Also, if you have job expenses, job hunting expenses, casualty and theft losses, you can all record here. However, line 29 has to exceed $6,200 if you're single, or $12,400 if you're married filing jointly. So itemizing deductions is actually beneficial to you. After all this explanation, now you can make your own decision. Can you use medical and dental expenses to reduce your tax bill, or the standard deduction, which is the first tax benefit, is actually more beneficial to you? It's up to you to decide. I can also teach you how to do your own taxes, no matter if you're single or married. Look in the description under this video for the link to my courses.